Which Hello, ladies and gentlemen. It's IBM TV, modern financing show. My name is Sasha Star, and I would like to introduce our guests for today. It's founder of IBM TV Network, Nick Paliveda. Hello, Nick.
Hey,
And Peter Bennett, who is graduate from New York University and is professional investor on Wall Street. How are you today, Peter?
Okay, I was on Wall Street, not anymore, Sasha.
oh,
Oh,
it's good. You're off the street. I
okay.
heard that one of the goals was to get people like you off the streets, and I
That's
guess that
probably
worked.
true. I'm too good.
You're too
Well,
good. Well, you are in
see,
Greenwich, Connecticut, right?
Wall Street
I
is
do live in
always
Connecticut.
in looking for people like you, Peter, because if not, it will be in trouble and sooner than we think. So the market is very challenging. There's a few days of since New Year, uh, and we almost expected that. So Dow also is still is intact and continue to climb here and there. Nasdaq is not doing well because the fears of inflation are quite real. And with inflation, I don't see a lot of mileage out of this high-tech stocks, although I could be wrong and they could skyrocket in half an hour, if you know what I mean. How are you feeling about that, Peter?
Well, the market's sort of acting exactly like my macro view is correct. And my macro view is basically, first of all, the Fed is between a rock and a hard place. We're in a very difficult situation. And if I was an investor, I'd be buckling down for the ride because I think we're going to have trouble. It's a very tight environment to find the right investments now. I don't like the overall market because the the problem is mainly inflation. And um, here's my three arguments why I think inflation is going to be very bad. But before I give those arguments, I want to say that here's why the Fed is between the rock and the hard place, and the investor is in the same situation because the Fed needs to raise rates, and rates have been drifting around. Interestingly, the rates are towards the high end of where they've been, but they're so low still. The 30-year was at 2.07, which it had hit last year. I was just looking at that. So, and the 10-year at 1.66. These are very low rates. Now, they're on the higher end for last year, but they're still low. But here's the problem. Medicare goes into deficit in 2026. The federal government of America and the world, by the way, this in a situation where they've promised the world to, I hate to say the world twice, but they promised so much to the retirees. The Medicare costs are going to be through the roof, and they haven't funded a penny. Social Security hasn't been funded. Social Security will go in deficit maybe 2023, 2033. But for the last X years, since basically FDR, the government has been taking money and that was designed to be funding the Social Security system and especially Medicare because it's a much bigger problem, and they've been spending it. So now in 2026, all of a sudden, they're going to be facing a situation where, hey, wait, we don't have money coming in. Now money's going out. That's not going to be good for inflation. But from the Fed's perspective, that means they're going to want zero interest rates or very low, even 2%. It's like if they have these huge deficits on one side, they're not going to want to compound the deficits by having high interest rates and paying interest on that. But then let's look at the other side. Inflation, one, the PPI, which you could argue is temporary because of Corona partly, but the PPI, the producer price index, just was reported recently at 10%, the CPI at 6.8%. Now, some people saying, okay, this is a temporary thing. Omicron, which I wanted to mention this, by the way, most people probably know this, but Omicron could be the best thing, because I heard yesterday that actually Greg Gutfeld said this on Fox News. He said he looked at all the flus that have been around since the Spanish flu, since early 1900s. He said they always came in 3 to 4 waves, and we are actually in the 4th wave now. Omicron is the 4th wave, so and they all mutated the same. They mutate to be more contagious and less dangerous. So Omicron is the answer in a way, even though right now it's a disaster in terms of contagion, because everybody's going to have it. Everybody I know has it practically, or somebody knows everybody who has it. It's all over. Everybody has it. So these people are becoming immune. I also heard, interestingly.
Hold on. How do you know that they are becoming immune? What makes
I can tell you this. The scientists are saying now that even though Delta didn't protect against Omicron, they're saying the studies show Omicron, people who have had Omicron, at least that's what they're saying so far. And this is also the general path of pathogens. But they're saying if you had Omicron, you won't get Omicron again. And also, if you have Omicron, you won't get Delta again.
Hold on. Who says so?
They're just scientists. There's studies. That's the best knowledge we have. But it's also the history of these things. We're in the 4th wave. I mean, I can't promise anything, but I'm hopeful that COVID is going to be gone in 2 months, roughly. That's what a lot of people are saying. It may not be true. Nobody knows for sure, but we may be out of this mess. But whether or not, it doesn't affect the financial situation. So here's the other problem. Listen to this. Number 2. So even if it backs off 10% or 6-7%, which I think it will, it's huge, still a huge inflation problem, coming up for 3 reasons. One, labor. Everywhere I'm reading, people are quitting more. They feel free to work. People made a lot of money because the stimulus from the government, and they have extra money, and there's a labor shortage. 10 million workers. 2, rents lag housing prices, and the CPI is based on rents. So, but the lag tends to be 6 to 9 months. So we haven't even seen the CPI effect of the rents, because the housing prices are up 20-25%, and the rents are coming because people come up for renewal. The landlord says, you know what, I can get a lot more rent. Number 3, and this is what I've been saying for a year now, roughly, and this I'm going to focus on for a second, then I'll hand it over to you guys, is energy. This is going to be a huge problem. I've been saying it. I see it coming more and more. Energy, oil prices are going to go through the roof. That's my prediction. So here's an article about Exxon, first of all, that I picked out. It says that they're spending much less on capital now, and I won't even give the numbers, but of that, they're also spending a reasonable amount on developing low carbon businesses. So that means that they're spending even less on oil exploration and production. And by the way, before I go through these other 2 sites, I'll say that I heard on a conference call of a USAC, which is one of my holdings, is a 5% holding. It's been doing very well, along with MPLX. Those are my 2 favorites, especially MPLX. But they said that they believe that the oil companies are investing 40% too little in CapEx. That's exploration. And so this is going to create a huge lag. Now, the government contribute that. We won't get into the politics of that now. We'll save that for the worst president show. But anyway, this is a huge lag, and it takes years to build this production. So now they're not exploring. They're not putting the money into the rigs, and this is going to drive it through the roof. There's an argument from ConocoPhillips. He says he argues that there's going to be a messy energy transition. Basically, what these oil companies are doing, which is reasonable. They're saying if we're going to only be in business 20 years with oil, we better move to other things, and we're going to return some money to our shareholders. We're not going to keep on over-producing like they have cyclically. But here's my new headline. Ready for this? I don't know if you can read this. J.P. Morgan sees oil prices hitting 125 in 22 and 150 in 23. That's J.P. Morgan Chase saying that. That means, first of all, I think they may be low because oil is very inelastic. In other words, it's less and less of people's budgets now because people get better energy efficiency out of their homes, out of their cars. So people are like, okay, I'll pay the extra money. I'll cut somewhere else. And the thing is, though, that once there's not enough oil, it doesn't matter. It's going to go to the price that requires consumers to cut back, and that could be a lot higher than 150. So we could they're saying this. I calculated maybe 5, 6, 650 a gallon. Not to mention taxes, I believe, are built on the underlying cost. So then with taxes, maybe we're starting to see 650 or 7, as incredible as it sounds, but it could go even higher. And it's going to be a messy energy transition, which really means you better get your portfolio in order here. And to me, it means being very defensive. Energy stocks, number one for me. Consumer staples, very important because they do the best they do well in an inflationary environment. Other than that, you have to be really careful about who you're picking. I like certain grocery-oriented REITs, shopping center REITs, but a lot of the malls, forget it. And a lot of other things between everything else going on are going to be really hurt. And there might be a big, very volatile year next year. So you better hunker down.
Peter, this is what you mentioned about the JP Morgan opinion on energy prices. It's very inflationary scenario. It's as inflationary as you can imagine.
Yeah.
And how can Federal Reserve not to raise interest rates? At the same time, you were saying before that they cannot raise interest rates.
Well, I don't know. They owe more money on Medicare alone than, and I always have to mention other countries, so I'll mention that too, but it's been argued that the unfunded liabilities for Medicare alone, because the government under Medicare A has promised free hospitalization for everybody over 65. And this was promised during FDR when people lived to either 65 or 68 on average. Now they're paying for the hospital bills for either till, maybe 85, roughly a couple's, life expectancy, one of them, but whatever it is, they're paying for all that hospital bills. The amount of money has been argued to be easily 100 trillion, maybe 150 or 200 trillion. Some people say 250 trillion. Maybe robotics will bring the cost down a little. It might bring it down a fair amount, but let's say they owe 150 trillion and it's brought down to 100 trillion. We're talking about more money than all privately held stocks, bonds, and real estate in the United States combined. That is a lot of debt. And if you play Monopoly and you go around the board and collect $1,000 each time, because I've played that when I was a kid, we played with that. Prices on real estate go up through the roof, and that's one place. Rents are going to go through the roof, and property will probably be a good investment. But real assets basically will also be a decent place, depending on where we are. But there's so many issues now, fundamental issues, so it's going to hurt.
Well, very pleasant scenario. Nick, what do you see as a way out of it? Buy some medical stocks, maybe? Sorry, can't hear you.
Interesting what Peter said about the unfunded Medicare liabilities. On Economics Monday, the Honorable David M. Walker, former Comptroller General of the United States, said the unfunded Medicare liabilities, which is not being addressed by the media in the United States, is easily $65 trillion. Okay, it could be more, like what you're saying, Peter. It could be over $100 trillion. Okay, the media isn't addressing it. Instead, and Congress isn't addressing it.
No, why
Instead,
would they?
why would they? Well, they have the Build Better Back program, adding
Right.
more additional debt of 1.8 trillion, never addressing the issue you just described, the unfunded liabilities of 100 trillion. Honestly, when I looked at the numbers, I go, I don't know how they're going to balance this. It doesn't make any sense to me because I know what I'm paying in. I know what I'm getting out. I know the cost. I'm going, and 10,000 people per day turn age 65 in the United States, 10,000 a day. So every day we got more and more people going on Medicare.
Right, exactly.
And the numbers don't make any sense. The The problem is if and when they're going to address it, and you know how Congress operates, they'll address it right the day before it becomes insolvent. And the insolvency is this decade. It's like
Yeah.
what? It'll be
Well, I said it goes
4
into
4 years.
deficit in 2026,
Yeah,
but remember they've been living on this money for the last 50 more
I know.
years.
And the thing
And that's
is,
been going into the budget, and they've been spending it.
yeah, I
So
know.
what happens when it even gets to zero? Let's say it's zero the year before or close to zero. It's like we're getting less and less revenue, so we need to print more money. You can't tax this because
Right.
even if you took everybody's house, everybody's stock,
Well,
and everybody's not just the
okay.
rich. I mean, everybody's. It would just pay for it. It's like then everybody has zero in the United States. And by the way, I have to throw this in. Very important. The world is in the exact same situation. So it's like,
Well,
I'm
so
going to
they
go
have,
to South America. I'm going to go to Europe. I'm going to go to Asia. I'm going to go to China. I'm going to go anywhere because if I've looked at all these countries, most of them actually probably are in worse shape. Why? Because the United States promised free hospital to all their retirees. A lot of these other countries, like Canada, Sasha, promised not only free hospital for all their retirees, free doctors. And at least in the United States, the consumer has to still pay for the doctors under Part B or Advantage, and part of the drugs too through Part D. So the United States has only promised the world; the rest of the world promised two worlds.
There's a small difference though in Canada because it's under provincial care program, healthcare program is
Yeah, they have
provincial.
to come up with the money. Where's the
So,
money coming
so
from?
the province is getting their taxes, and
It's
33%
not enough.
of all taxes collected going into Medicare. Now, and if it's enough or it
Third.
should be more, it's arguable, but it's not the federal government in Canada
Right, but
whose
it's so
responsibility it
so.
is.
If we passed all this debt to the states, the United States, it wouldn't help. And let me put it this way: those provinces have not pre-funded for the next 20 or 30 years, paying for all this Medicare. So it's the same situation.
Yeah, is there graying of America and Canada? But throw this into your calculus, Mr. Bennett.
What's that?
70% of USA people in the United States don't have $1,000 in cash.
Oh, I know.
In other
That's
words,
oh my
70, and
God.
I was telling Sasha this, they have their cell phone, they have their big screen TV, they may be
Yep.
watching us on Roku in the next couple of weeks. But if they had to go to the bank right now, financial emergency or health emergency, and get $1,000, they
Yeah.
don't have it. Okay,
Yeah.
so the question is, who's going to pay for all this? I mean, the Democrats, what they're saying is we're just going to print money and hand it out, and everything's going to be wonderful. Matter of fact, we're going to create more programs to help more people and print more money, and everything be wonderful. They tried that in Venezuela. How did that work, Peter? How'd that work?
Yeah.
How's Venezuela doing right now?
Yeah, it doesn't work well in Zimbabwe, Venezuela. You can only print so much money. Now, I don't think things are going to collapse. I hope not. But the
Yeah,
thing is, it's going to squeeze the heck out of people. Retirees who think that they're retired are going to say, "Oh no, I better
sure.
get a part-time job or a full-time job
Yeah.
if they can get it." It's going to be an ugly situation for a lot of people, and young people, everybody, in different demographics, and obviously the very wealthy will survive because they always do, but they'll, I'm sure tax rates will go up on them, but it won't dent it. You could take all their money and it really won't dent it because you could take everybody's money and it wouldn't really cover it.
Yeah.
So, and you'd collapse the economy. So
But
and that's why the Fed is in a rock and hard place, because they can't have interest rates go up. So they talk a big game and it goes up a little bit, and then they adjust the short-term rates or they stop buying some securities. But the long-term rate, by the way, is behaving a lot like they don't believe the Fed at all. And that was a point of a BNP or Paribas article. What they're saying is the long-term rates are 2% if for 30 years. So if they believed that the Fed was going to raise rates a lot, then they would say, well, nobody's going to buy a 30-year investment for 2%, but rather they're behaving like there's going to be trouble down the road, and
right.
rates are going to stay low and inflation higher.
Well, I think the advice to individual investors is to do what you say, buy energy stocks.
Well,
And
that's one place. Yeah.
that's the reason I have been keeping Enbridge, MPLX, USAC. They've all done well. In other words,
Oh, very well,
um,
extremely well.
and then the only one that I've had trouble with is Antril Antero Midstream Corp. It's down a little bit since I bought it.
Yeah, well, you know what?
I didn't
I
get
still
rid of
like it a lot. It's 2/3 of my portfolio. It's not a big holding, but I really like them. I think I'm probably, now that you mentioned it, I'm probably under there, but I can only be so much energy. So I have 22% in MPLX. I have 5% in USAC, 2/3% in AM, 2/3 in Sunoco, which is a gas station company. But
Yeah.
but let me throw this, and I have a new one this week, which is a small one. But Nick, let me add this. Whenever you look at these stocks,
Yeah.
remember to add in your 10% or 8% interest on most of them. So
Right.
if Antero's paying you 10% and is slightly down, which is ridiculous for
Correct.
Antero, then you have to add back those dividends. So that's
Yeah, right. You'd have to add back the dividends. I do that. I did look at that. And when I was trimming the portfolio back, trying to create capital losses, anything that was lost, I just get rid of at the end of the year because I needed to generate capital losses to offset a lot of the capital gains I generated by trading in MPLX, believe it or not. The trades were real simple. If it hits like 31 or 32, I sell. Then it goes back down to 28. I buy.
Yeah,
then it goes up to
28, it's back up in the 30s. But
it's back up in the 30s. It's kind of a stupid
Nick, I hate to
trade.
pitch this, but it may not work that way you don't get capital gains and losses on MPLX itself. It's an MLP, so it has different tax treatment.
With MPLX.
But the nice thing is about the MLPs is, and there's one bad thing, which is you get K1, so it'll raise your accounting costs. That's why now I only keep 2 outside my IRAs, and the smaller ones I just put in my IRAs. And you could, but the thing is, you don't pay tax on that, and plus you get depreciation, depletion, so you don't pay tax for many, many years because it's first return of capital. But when you buy and sell, they net it out at the end of the year, and they just figure out what your net was. So you can't really take a capital loss on an MLP. And also you have to watch it in an IRA because there's something called BTI. I think it's
unrealized business taxable income. UBTI.
Yeah, it's unrelated. UBTI, I think, is unrelated business. So let's say you have an oil company, like an oil MLP or a gas MLP, and they are also have a 7-Eleven. I'm just picking this up. That's not related to the energy business. So that business they have to report, and if you have too much of that, then there's a penalty. That said, I don't have any problems because you hold the small ones in an IRA. Some years I paid a little UBTI tax, no big deal, but it's not worth the accounting anymore because my accounting bill was going
but it sounds to me
should be outside.
Yeah, it sounds to me the individual investor should really look at energy stocks. That's what you're saying, Peter.
Well, number one is without a question energy. Tech I don't mind either, and I'll tell you why. But
staples.
But it's only big tech. The interesting thing, you look at last year. 5 stocks accounted for 35% of the S&P's gain, 26% gain. 5 stocks was 1/3 of the gain. Those stocks, I had 3 of them. At times, especially Microsoft, Google, and Nvidia, I had, and then Tesla and Apple. And Tesla, I'm not so, and Apple, I'm never confident about. But so here's the thing: tech can swim against the stream. In other words, I think big tech especially can, like the companies I like Microsoft, to a bit, and also Google to a bit. And my main was Amazon. I love Amazon right now, and KLAC, by the way, too. But all these, if I own them personally, I sell options on them. So there's a padding for it anyway. So you could sell an option and build in a 20% pad in case it goes down 20. But in the long run, these are such growth companies that I think they have such a future that they'll overcome inflation. And a little inflation might help them a little too. But, I think it'll be a rough ride for tech next year, but I'm not getting out of tech because I think in the long run, we're in the information age. Things are transforming.
Yeah, you might decrease your exposure to tech, but you cannot get out of tech altogether. It's impossible. And I noticed, speaking about high yield paying dividend stocks, I've noticed, and I was looking for some time at Rio Tinto is a Australian mining company. They're paying now 10.5% dividends. It's not too shabby. And in my opinion, it's quite sustainable. The only thing is that the commodity prices may go down somewhat. But
that's what I'm concerned with. You know what? I stay away now because my forecast is an ugly world economy in terms of inflation, and it's going to slow a lot of things down. There are so many issues out there. And so if anybody has a lot of coal, and I think I'd have to look at Rio again, but I've looked at them, but I've looked at a lot of these miners, and the problem is if they have a lot of iron ore or coal, I say, nope, I'm not going to touch it. Because first of all, the office market, nobody even talks about this on top of all the other issues, but because of COVID, it accelerated the vacancies in offices around the world. And as an example, New York City, I looked recently at 25% occupancy, not vacancy, occupancy. Similar with Dallas, with San Francisco. All these buildings used to be built. Now there's going to be a lot of empty buildings, which is, as an aside, well, I'll mention this under the dividend section, but I moved out of a dividend thing. But you have to be careful of, what is that going to do? You're talking about, how many office buildings are going to be built now? What if no more office buildings are built around the world almost for time? That could really affect certain businesses like the iron ore business. Yeah, the infrastructure might build a few bridges, but that's not going to make up for all those office buildings that they say, wait a minute, what are we going to do with all these office buildings? And I'll talk a little bit about that in the dividend section because I sold the stock. All right. I can mention now a stock I sold. I took a 95% profit in 1 year. I had the best storage company, NSA, but I got out because the dividend was 5. Now it's 2.5 or something like that too. It was doubled, but also, and that's national storage. But the other thing was I started thinking about this, and I said, wait a minute, if there's all these office buildings, I'm already staying away from medical REITs, any office REITs, because what are these buildings? What's going to happen with all these vacant buildings around the world? So then I thought, well, wait a minute, can they convert to storage? And I looked at storage, and I looked at the finances, and there's all kind of sites to say how to convert your office building to storage, and it's been done for years. And so it costs I think $7 to $20 a square foot to convert, and storage costs are going for, you can make the money back maybe in a year for converting. So all these places, Miami, New York, where they have storage, all of a sudden these buildings are going to say, hey, wait, what are we going to do? We can go residential. We can turn into a medical office. We've got an empty building here. We've got many empty buildings all over. And this, of course, is based on all these companies saying our workers are going to stay at home now because they prefer it. So,
I think, Peter,
so they can move into storage too. So I got out of storage. I said, you know what? That was a great profit. I don't need 2% dividend with these issues coming up.
Yeah, I think we live in a kind of an age of conversions. The offices will be converted into condominiums, the condominiums will be converted into hotels, and hotels will be converted into office space.
No, that's not the last one. Everything but the last one. No. But you're right. Maybe some of these offices will become hotels too. It could hurt. There's a lot. I mean, there's going to be office vacancies all over the world.
Yeah, but the thing is, we have a shortage of homes. So like in my community, the Briar Creek Country Club, if you go into the club, there's 0 available. If you go in the townhouses, we have
it will help.
We have 4 out of 450 units that are available. In other words, you're looking
at New York City.
You're looking at there's no housing.
Studio, right?
Yeah, right. I mean, the thing is, it's impossible. So you're everywhere I shop for housing across the country on Zillow, of course, Peter, it's almost like there's no good deals. I mean,
well, housing is up 20 to 25% in the United States. The cost of lumber is way up. The demand is there from the next coming generations. So, but you're right, that will help. I mean,
well, the conversion of office buildings into condominiums, you might see that take place.
And then it depends on the area too. I mean, in Florida, you probably don't have that many office buildings. As an example of a state, or North Carolina, where it would really impact the demand because there's so much demand.
Yeah, that certain states have lost population. They showed California lost 300,000. New York lost a couple 100,000. The gainers are Texas and Florida, where they.
Yeah, you wonder why.
Well, let's look. What are the high taxing states? California, Florida, Texas, or New York?
Exactly.
Florida and Texas have no income tax. New York and California have the income tax. So you could make an argument they're just leaving the high tax, high cost jurisdiction in
Yeah,
where
that's,
we're at.
you know what?
In Research Triangle Park, there was just another $1 billion development and another potential $40 billion new development here in this area. And I keep looking, why are people moving here? But then when I look at, they're moving from San Francisco.
Yeah,
The
exactly.
pricing of San Francisco is so expensive compared to Raleigh, Durham. They pick up and they move over here, just like Austin, Texas.
And especially
It's
with
awesome. Yeah.
remote, jobs, more and more remote jobs, then people don't need to live in a city. They needed to live in a city before because that's where a lot of jobs were. But
Right.
so you add that to get with everything, and also lifestyle, and also the politics of some of these places. And now, not to get too deeply into politics again, but
Yeah.
rising crime in some of these big cities, and it's like, well, I could live in the country.
Well, the thing is, I see you're into energy stocks, and the thing is, that's where I put a lot of my personal assets into energy stocks because I'm a believer of that. But
Yeah.
rather than consumer staples, I went to biotech. In other words, I think what you're going to see is, well, Bristol Myers Squibb and Pfizer especially,
Mhm.
I thought were good deals. So far they have been good deals. And I just went into BMY and Pfizer. I'm not sure. Real problem is, how long should I stay in them before, like Pfizer's making a lot of money off the government on their.
Oh yeah, they're making a ton.
Okay, but when will it turn around and Pfizer turn around? Then Bristol Myers Squibb, the real reason it took a big loss earlier this year was, if Joe Biden has its way, it's going to put price controls on their prescription drugs. So last quarter it took 11% hit, and that's when I bought it, when it was down 11%, because I'm going, is that really going to pass that bill?
Well, that's what makes me nervous about pharma, which is why I'm a 1/4% in THQ, and that's it. Because
Yeah, yeah.
and you know what? Let
I'm
me
gambling on pharma, but I'm gambling on a positive side. I think.
Right. Well, you're probably
that-
right, but here's the problem
yeah.
too that I never thought of. But as Medicare squeezes the government, guess what the government's going to turn around and do? They're going to start squeezing the drug companies, right? They can say, "Well, we can't afford this because they can't. They've overspent." The drug companies might be the first ones they go after, or one of the first ones saying, "Look, we don't want to pay 100 billion. We'd rather pay 90 billion, and make our deficit less by." Trillion, I mean, and so maybe they'll take it at the height of the drug companies as the politics, especially goes against, the inflation and everything.
And by the way,
There
that's
could be a lot of pressure on the drug companies.
that's the risk of being in biotech and big pharma, is
Yeah.
what you just described. In other words, it's a government risk. But if you look at every corporation out there has government risk.
Yeah, that's true.
Tesla actually made their money off the government. That's what gets me. In other words, SpaceX, NASA bailed out Elon Musk. He would have been broke,
Right.
but he got bailed out by the U.S. government. And then you know what he did to reward the U.S. government? He built his factories in China.
Oh, well,
And so
that's not good.
this guy
I didn't know that.
is incredible with the press. His persona in the press is he can do no wrong.
Right.
In reality, and not only did he build it in China, he built it in a place in China where the Chinese are suppressing the minority groups.
Oh yeah, yeah.
In other words, it was like this: in your eye, baby. You know,
along with Nike and a bunch of other companies.
what they get away with, Peter, is and the great thing about these big corporations is their media persona is so different than how they operate. It's just incredible. But the thing that hit the news this was Elizabeth Holmes. I don't know if you heard about that. She's going. Looks like she's maybe going to jail. She's out on bail now.
She's convicted.
Yeah, she's convicted. So it looks like she's going to
on
jail.
3 counts. They can appeal, but I doubt it.
Right. But her company was unbelievable. In other words, her promises: you prick your finger, they take your blood, they can calculate everything. And it was a big sale. People invested hundreds of millions of dollars, including a lot of big names.
A lot of people lost money. Yeah.
And then they lost their tail, right? Because what happened was the company couldn't do what it promised.
Right. Yeah. She was a dreamer. I don't know all the facts. I'm not saying she went too far, clearly, because she made her dreams sound like promises. It sounds to me like, I never followed the case closely, but people make promises all the time. Look at Bitcoin, which is now at 46.
I get Bitcoin and cryptocurrency promoters every day. I mean, every day
Oh
they're
yeah, they're
talking
all
about that.
over.
And every day I'm going like, and I have a Bitcoin sitting there. I believe it's worthless,
Right.
but Bitcoin says it's worth
You
50,000.
should cash it at 46
The
today.
problem is you can't cash it anywhere. You know, if I go to Wells Fargo, I say, hey, give me where I
I
bank at,
know there's a way you can get rid
give
of
me
that
50
thing
grand, baby.
for
I don't think I would get it.
46,000. I tell you, I think in my forecast, although look, John Paulson says it's a scarce object. I wanted to mention this. This was very interesting. So we had people on the show previously talking about how Satoshi was it Nakamoto, I believe that's his name. You know, promised not to print any more Bitcoin. So Bitcoin is so much better than um, all the other investments, you know, the other Bitcoins, the Ethereum and everything, of which there are something like 7,000 now, by the way, because they keep creating them every day. So there's this article in the Post about a guy who gets sued because he seemed to have been, I believe he was claiming to be this Satoshi guy. But in the article, it says nobody knows who Satoshi is. It turns out he's not Satoshi, and he loses some money or goes to jail. I don't know, remember if it was civil or criminal. But so it turns out, though, in the article, it says nobody knows who Satoshi is. So people would say, oh, Satoshi promised it. It's like Satoshi promised not to print more Bitcoin, but nobody even knows who Satoshi is. What kind of promise is that? It's a promise of nothing versus by somebody who nobody even knows who he is. And he could easily print more because nobody even can find him, and nobody even knows if he's alive or if somebody else took over. Anything, the whole thing. I'll tell you what I predict, and I could be wrong. It could go to $1 million. So don't listen to me because this is the most speculative thing, you know, or as speculative as, you know, Beanie Babies and tulips. But maybe it'll go to $1 million. Don't, you know, do whatever you think is right. But my theory is that because Congress is now in the infrastructure bill passed rules that say you have to report on all Bitcoin transactions, which is a nightmare, by the way, because the original bases are not accurately recorded. So you have to actually keep your receipts and prove this. A lot of people probably don't have those receipts. But once, and I believe it starts in 23. So as soon as people start doing this, they're going to say, what is this? And I believe the market will probably keep moving down as it has been towards the end of the year, or maybe sooner, until it hits like, okay, now people are going to find out what this means, which is all your crypto transactions are going to be reported to the IRS. You're going to know about them, and you have to keep very careful records. Why wouldn't you just keep dollars at this point?
But it defeats all the purpose of the Bitcoin, that it was kind of a way around the government, around the banking system, or so on.
Yeah.
Now,
I mean,
what kind of a deal is that? So right now,
what is it?
Bitcoin's latest, I looked at 46,500.
Yeah.
It seems to me it will test 30,000 level again, and then we will see whether it will stay there or it will go down from there. That will be quite worrisome. If
Well,
it will go
it's
down to 25,000, then I don't see any bottom then.
But
it can go to anywhere, but that's if I had to predict. I'm not shorting it. If I could, I'm not longing it. I'm not touching it. I would. There's, you know, I mean, look, we have fundamental dividend stocks. We have selling options on the show. You know, these are solid things you
yeah,
can.
it's all things you can do.
There's fundamentals behind it.
Well,
Right.
right now with selling option, Peter, I'm struggling somewhat with the level that a lot of well-known names, tech stocks including, they went down in the last few days, a couple of weeks, maybe even.
Yeah.
Are they going to continue to go down? Then it may be even better moment to sell puts or start right there. I would like to see at least one up day on the tech stocks. That would be maybe a signal to sell puts. But I'm not doing that because right now it's down, 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 and I'm watching daily trading in some big stocks like Microsoft, Nvidia, even AMD, and they start. It's almost the same picture. It's like there is a conductor and an orchestra,
Right.
and they all marching to the same conductor.
Well, inflation won't be good for these stocks because the
Right.
growth, the people always calculate it as the discounted growth. And then if you calculate it as, okay, if you're discounting the growth less. But look, you know, I mean, I think we're going to have inflation. And I don't think it'll be a 10, first of all. And I think these companies can outgrow it. But look, my Microsoft, I'm all long options. And a perfect example is I'm very conservative on Microsoft. I sold 230s. It's floating around 223 for a year or two from now. So if it just stays flat, I get to walk away with the premium. and it's a nice premium because it's just, based on the
Yes,
options.
premiums are good. Agree. Agree.
Yeah, and Amazon, I'm at 4,500, and I did that a while ago, and now it's at 3,300. So I'm in the money on these things. And then KLAC has been a huge success. They make the equipment, and oh my gosh, I did. Every time I tell you the story, I say it happens a lot. I sell the puts, and then way before the time it hits it, so it doesn't always happen. But KLAC, I sold 470 puts when it was at about 350, and I figured, okay, it's going to take 2 years. No way is it going to go to 470. Now it's at 434, and I'm going, you know what? I may have left money on the table, but I'm still doing very well. But KLAC is, that I've said before. It's the Levi's of the gold rush. In other words, that when
Yeah,
I
exactly.
said that they make the equipment, the person who made the most money, the ones were the
Right.
suppliers. Very few people actually found gold, but the people who
Yep.
sold equipment, the restaurants, whoever fed them, everything made decent money. But the big winner was Levi's because they made the jeans and the
Right.
equipment. Well, KLAC makes the chips to test. They make the equipment to test the chips, and all these new plants like Intel in Texas and everything. They all need this equipment. So that stock has just been shooting up, and I'm hanging on, and I hope it doesn't go past 472 soon, although I'd love it to go past
I
470.
think it will continue to go higher and higher because
Yeah,
you're
I heard
right.
a forecast of up to 500 now,
Sure.
but you know what? If I walk away with that whole premium in that case, I'm
You'll be
happy. I
happy.
took,
Right.
so,
Absolutely.
and the other side is if there's there could be, a 10-20% downdraft in tech, because if inflation kicks up from energy, it's not going to be necessarily good for tech. Even as they're growing, they're shrink. There's two forces. So it's not my favorite sector, but I'm not going to be out of Amazon, or because in the long run their growth will overcome inflation.
Well, tech stocks move to a subscription-based models on almost all the stuff they're doing,
That's
so they
true.
have reoccurring revenue. We did that with our
Oh,
company now about 10 years ago or so, because the reoccurring revenue is better than having the spikes up and down on your revenue. And I think because of that, the tech stocks are going to be solid for a long time to go, because they
yeah.
basically make people addicted to whatever service or
Yeah,
software that they have.
that's a way
You
to
know,
look at it. It's
yeah,
addictive.
well,
Yeah, and it's difficult
somebody
to
can't
switch
get rid of
I'm
it.
addicted to Amazon. I can buy
Well,
stuff. No
Amazon
kidding.
makes most of their money through AWS, so
Yeah, I
Yes.
know that's true.
they have their profit center with AWS.
I know that's
But
true.
what I found out is that, Jeff Bezos is an opportunist. Anytime he finds a way to get the Amazon name out there, he does it. And they are moving heavily into the circuit that we're moving into, which is media.
Oh,
And I noticed that LinkedIn, which is owned by Microsoft, by the way, which we
oh,
distribute our content through, by the way, have now created their own news show, by the way.
oh,
Okay,
really
competing
interesting.
with our news show that goes through LinkedIn. I'm going like, great, because here's the problem with media, little media like us competing with big tech media. They
Right.
have a lot of resources,
Sure.
money they can throw at media to get their name out. So LinkedIn actually has LinkedIn News. It just started maybe about a week ago. Here's their disadvantage. It's like a chess game. What's their disadvantage? Because we work with them. We worked with IBM for 2 years before we started IBM TV.
What's their
Their
disadvantage?
their disadvantage, they don't move very quickly. In other words, they can't move very quickly, and they stumble over themselves. So if you see an opportunity, say like the Worst President show, once we had 455,000 views, we moved a show into that area. For them to do that would take them about 6 months to 8 months once they find it's a good idea.
Right.
There is a
Yeah,
committee, there is a board of directors, there is a
exactly. You got
executive.
it. Okay, well, we got to get our producers. We got to find out who the actor is going to be. We got to figure out if we're
Right.
going to script it. We're going to have to be non-scripted. By the time they figure it out, it's over. So the only advantage we actually have in the market space is that we can quickly find something, create
Oh,
something, and get it out where the big tech companies like IBM can't. And how we knew it? Well, we're filming at the IBM offices here in Raleigh, and the attorney was sitting there back in New York, reviewing every word that was said out of the person from IBM, and then
oh,
stop production all the way through because they're going like, "Oh, you can't use that word. Elephant's a bad word. You know,
right.
we could have some things against it. Blah blah blah." And but that's the only advantage we have in terms of resources. man, they've got a lot of money. You know, it's I mean, they
Oh,
can
yeah, of
throw
course, but it's not
tons
all
of money
about
at
money. That
stuff.
helps execution, but
Yeah,
it doesn't help with conveying reality. That's what I said.
yeah, I know.
But
They
look at this show as
got
a
'em.
review. I mean, how many topics have we hit? And I mentioned that hardly anybody's reporting the Medicare crisis, the
Oh, the
office
Medicare crisis.
crisis,
Yeah,
and energy's going through the roof. I mean, you'll see this clips of it very rarely, but I am finding more of it in all these areas. I mean, everybody knows about Medicare. That's been for years, but nobody's really highlighting it on the news. They'd rather talk about Ukraine and Build Back Better and not mentioning the really
yeah.
overall situation. So,
Well, no,
um,
I think Medicare insolvent is 2026 is a really good topic that we
yeah,
could develop a whole show on.
you could.
Seriously. And the thing is, then they go back to the major studios for them to do a whole show. They'll get it out in October, November next year, where we could probably get it out in a month or two if we needed to. So
You're right.
that's the only,
After worst presidents is over, you can
yeah, the
start a
worst part
series.
is over.
They
Yeah,
will get it out when Medicare will be insolvent for good.
yeah,
That's
yeah,
what
Oh
they
yeah, well they'll figure it out sooner or later.
yeah. Medicare insolvent 2026. I mean, that's something that is a real problem that no one is discussing. And it's, I think the
And
other
again,
thing
other
that is,
countries too. I don't know the exact years for every other country, but they're all in the same situation or worse. So, I mean, just because I hate to focus like, oh, it's a U.S. problem. It's
right.
in. I've looked at Social Security systems and Medicare systems, medical systems in all around the world. Every country I can find in South America, Europe, Asia, it's all the same or worse.
Peter, it
So,
would be nice if US could outsource Medicare to some other country.
robots.
That would be great.
Some of it will be outsourced to robots. Believe me, the robots are coming, but that's going to be another 5 to 10 years, maybe. But they'll eventually cause other issues, which I hate to be like the doom and gloom person because things are evolving. But Elon Musk said that something like AI could be the worst catastrophe that ever hit mankind, and it's true because eventually these robots, which are a lot smarter than people in a lot of ways, are talking better, they're moving
Right.
better, they're getting into restaurants. It's like, what are people going to be doing again? but so that may at least reduce some medical costs. So that may at least help a little. But that's too far down the road right now. I mean, and you know what? Even if it softens the blow, it's just way too much overpromised. And politicians never want to address this. Who's going to tell people you can't retire, you can't get your Social Security, or we're going to be paying so much money, your Social Security is going to be worthless? No, they'd rather find it, handle
Yeah,
it year by year and
well,
keep it around.
you can't get elected. I mean, you
Exactly,
can't
that's what I'm saying.
if you tell the truth. Okay, you
Yeah,
start with this premise. You don't have $1,000. Okay, how are you going to get elected, Peter? You have to lie to the people to get elected.
exactly.
You
Yeah,
have to tell
you
them.
know how you get
You
elected?
got to tell them that
Okay,
things are
promise
great.
that that in 2 years the number will be instead of 70%, 65%. So 5% of people will have $1,000 or more.
Really?
Because of
Okay, so that's an
inflation,
That's how
improvement.
you get elected.
and
Okay, there we go.
that'll pay for your groceries.
Yeah, yeah. Well, I think that's the real problem that they have. In other words, that when David Walker was running for election, okay, the problem he was telling people the truth about the financial systems in their states.
Oh,
They didn't want to hear that,
yeah.
and so the thing is, what they wanted to hear is how they were going to be handed money by him, and he doesn't do that stuff. And so you're almost not electable, and it's just like, I'm going to get you a chicken in your pot. I'm going to give you this. I'm going to give you
Right,
that.
exactly.
I'm
Yeah.
going to give you all this stuff. Roses are going to take place. Your life's going to be better. They got to build this beautiful picture. They can't say
Yeah,
Medicare is going to be insolvent in 2026. Yeah, you want to get
We
elected?
got to cut back our
Tell,
budgets.
yeah. Tell them this. Don't tell them that one. Tell them that Medicare goes down in 2026, Peter. Go do that and go run for office someday.
Yeah, exactly.
You
Good
know,
luck.
yeah, good luck. Okay, so the thing is that this is the real problem with politicians.
well, the
And then
best
go
thing.
on further. Tell the people in America Social Security is insolvent in 2034, and then run for a law. You
Okay,
can't
so
win.
there is an 8 years period where you will have no Medicare, but you will still
No,
have
that's not
Social
true.
Security. And then
No, they
after
will print
34,
money. They have to
done.
print money.
Yeah,
It
yeah,
will not be tenable to tell people you can't go to the hospital, especially all those retired voters who are going to be, 20, 25% of the population, and all the people who have parents who are going to be another huge part, who are going to say, wait, you promised I don't want to take care of I can't afford the hospital bills. So they have to come up with the money, and there's going to be more money in the system. So modern monetary theory is going to be blown out of the water. We can print as much as we want. It's going to have effects for sure. It already has. And one of those effects is housing prices going through the roof and rents going through the roof. And so we'll see. But I think we're going to have to run soon because we're running at
Yes,
towards
yes, it was wonderful program. Thank you very much, both Peter and Nick, for today's program. And we are going to have next program, of course, next Wednesday. In the meantime, have a great trading, successful week, and see you in a week time. It's IBM TV or Pod TV now. Modern Investing with Sasha. Thank you very much. Bye-bye.